All right, what's up, everybody? Episode 5 of Real Estate Coffee Talk Podcast. All right.
Let's go. Hope everybody had a good St. Patrick's Day.
Yeah. You know what the craziest thing that I was thinking about? Sorry, I was just thinking about this. We have these coffee cups where it's the coffee talk. I think we only had coffee on the first episode, except for Deshella had coffee the last episode.
Well, if my Gajia didn't break, I would probably have some coffee, but it kind of works, but it's not the greatest. So
I decided to give up. Well, not give up on coffee, but I can only drink it if it's like loaded with good creamer and all the fun stuff, and it's just way too many calories I don't need. So, and I tried switching to the sugar-free creamer. It's not the same, so I just don't do it at all.
I just don't like it.
Yeah.
Simple as
Sorry.
that. No reason.
That was a total random thought that
it's
I
kind of
had.
weird. All
But I
right.
really wanted to.
Regardless of the coffee situation.
What are we going to talk about today? Well, we're going to, what prompted this episode is I've seen a few posts on Facebook lately, social media. We got agents that are coming out and they're frustrated for their buyers not being able to, compete, or their offers not even considered, for an example, FHA or VA loans, we see conventional on there, they're just disregarding them. I'm not saying that everybody's doing it, but I am just seeing just more and more frustration. And trust me, agents, like I've been dealing with this frustration since I got in the industry, right? And we're gonna kind of decipher like what are some of the distinct differences today and why you should probably not disregard, an FHA or a VA loan over a conventional loan just strictly by the program. So yeah, I'm really excited.
Yeah, and I just kind of want to give an explanation because I had this question come up a few days ago by a client, and basically they asked me, they're like, okay, so, why, we're talking about going FHA. He was like, but it's a government loan. Shouldn't it be harder to qualify for? Like, it doesn't make sense. Why wouldn't they be more lenient on conventional? To give everybody some explanation, the reason FHA loans and sometimes VA loans have a little bit more lenient guidelines in terms of debt to income ratio and credit scores and things like that is because they're backed by the federal government, or at least VA is guaranteed 25% by the VA, and FHA is 100% backed by the government.
Insured, yeah.
100%. Yeah, insured. There you go. So basically, when that investor is given the money for the mortgage, right, the investor in the bond market, not the lender, if they lend on an FHA loan, they're getting paid regardless of if that borrower pays the loan back or not. With VA, they have that 25% protection too. With conventional, they do not, right? And I think that's a thing that sometimes people forget as to why they're different and why the guidelines are a little bit more lenient. So I think naturally whenever anybody hears like an FHA loan now, or VA even, they're like, oh, it's bad credit, or it's not a good borrower. I think that's a really, really bad
Assumption.
Yeah, it's a terrible assumption.
Yeah.
The guidelines are looser, 100%, but it doesn't mean it's a bad borrower.
Correct. It just could be that is the best option for them and
it's more cost effective
situation it is, because I know we've talked about it in the past where one of our buyers was pre-approved FHA and they could have gone conventional, but based on whether it was pricing,
mortgage insurance,
and stuff like that.
Yeah.
I mean, it made more sense to go one way than the other. So it wasn't because they were per se a bad buyer.
Yeah,
it just was
just the better program for them. Yeah. Well, I know you've had a buyer actually close. Typically the way you would do it, right, is you have a buyer who closes FHA, and then it's like a stepping stone loan. You get them into a conventional loan. That's usually the plan. But you've actually had somebody go the other way, right? You've had a client go
first
conventional.
of all, let's get the misconceptions. Okay, so conventional loans are not better than FHA or VA.
Yeah.
Okay, it is 100% incorrect. Okay, first of all, VA is one of the best performing loans, right? Okay, and that's something that those veterans, those heroes, those veterans, they've earned that right? So every single program I have had that, okay, I have had it to where I've had a conventional buyer that's needed to flip to FHA. It's whatever the program guidelines allow, right? Okay, FHA, they're a little bit more, lenient on credit scores, right? But, one of the things is like credit score doesn't dictate everything either. Conventional loans, people look at conventional loan like you have more money. Well, conventional loans actually require a cheaper down payment than FHA. And VA doesn't even consider a down payment. VA also doesn't have debt to income ratio requirements. They have what we call as a residual income requirement, right? So, you're strapped or you're constricted with conventional, and you don't know everybody's situation. So why, my thing is why is an agent or anybody making a decision on, the qualifying aspects of a client, So, the one situation where I did have that was, so I had a client, they owned 2 houses, right? And he had to sell his house, right? Well, at that point, when he sold it, he had a court obligation, right? That pushed him out of conventional guidelines, right? He had a 740 credit score. Okay. His debt to income ratio was like 52%, right? And with FHA, you can go up to 56.99 on the back end, 46.99. And I'll let Sam break it down what debt to income ratio is. Okay. So Sam, give a breakdown really quick.
Oh yeah. Debt to income ratio. It's just whatever your monthly obligations are, whether they're on a credit report or court obligated or court ordered, versus your gross monthly income. That's it. Simple as that.
What's the front? So the front, we're going.
Front's your housing ratio. So you'd look at what your potential, cost is going to be for your housing. And I don't just mean just the payment, because you have to look at everything, right? Your HOA fees, your insurance, your taxes, everything is included in that front end housing ratio. And then the back end is just your projected housing payment or expenses, plus all the other debts and court ordered obligations you have.
Yeah.
Yep.
And this is a really cool thing. So what he did was he came over and he couldn't sell his house in time, right? So he needed to hold both houses, right? And FHA allotted him because that conventional house, it was put on the market. So it was put on the market, okay, and it was listed. His debt to income ratios, couldn't get those below. He had another court obligation, right? What were we able to do? Utilize FHA. And this is a phenomenal bar. We're talking 700 scores. He's got assets. At the end of the day, he just utilized FHA. And actually, the interest rate on FHA, because it's insured by the federal government, was actually lower than conventional. So people, listen, out there, 620 is your minimum credit score in conventional, right? FHA, 580, right? Well, technically it's 500, but you're required to put 10% down under 580. But, at the end of the day, I can't really understand, like, why wouldn't you utilize a program if it's there
available,
for you?
yeah.
Right?
It's available. If it's more cost effective and it's going to put you in a better financial position and you and your family in a better financial position, why wouldn't you do it?
Yeah. And then, in regards to the credit scores, if you're below a 680 with conventional, your mortgage insurance, by the way, your private mortgage, it's going to be atrocious. Yeah. You might not even, it might disqualify you from the program alone.
Yeah.
So, the sweet spot is above 680, but like I said, FHA if it's there and we can utilize it, and we'll talk about appraisals later, and that's probably the main, main problem with it. But.
Well, and I think the whole purpose we wanted to have this episode is because right now we're seeing these FHA and VA buyers strike out. Not only are finance buyers in general striking out because cash offers are just flooding the market, but especially these government these pre-approved buyers with government loans they're striking out. And I really can't think of a reason why, other than just there's that misconception that they're worse or the appraisal or the appraiser is going to be more heavy. I mean, they don't really require anything more, because what I tell everybody is that the house is going to get, kicked over with one push. You're not going to get a conventional appraisal to pass on that either. So it's like, it doesn't matter. You know what I mean?
It's hit or miss too, because these appraisers are human. They have guidelines, but it's discretion at some points too. Yeah. It's an opinion of value, right? It's going to be their opinion on it, right? Which is why they can go into a basement and go, that looks like lead-based paint or fiberglass or whatever it is, right? Or asbestos. Get a report. Some might say that, some might not, right? So we don't know what we're going to get. And Sam, you had an appraisal conventional, right? What did you get subject to for?
Outlet covers.
Outlet covers, everybody.
That were sitting right on. In the appraiser's picture, it was sitting right on the counter, like in front of it.
And we got hit for it.
Like, he literally could have went to the listing agent or the seller and been like, "Hey, can you screw these on really quick? Like, I'm here, please."
Right. Well, I got dinged on a conventional appraisal for a single missing roof shingle, a single shingle, and we had already through the seller we negotiated, hey, file a storm damage claim, get the roof replaced.
Yeah.
It had been paid for. It had been scheduled for 2 weeks after we're supposed to close. And they're like, no, you got to climb up on this second story roof and put a single shingle on there.
I mean, it comes down. Okay, so what does the appraiser consider livable? What do they consider a risk? Once again, we're human, right? Yeah. Humans, we have our discretion. We have our perception of everything, right? Yeah. So you might get a good appraiser, you might not. Like we just closed down a VA refinance, right? They bought the house, was it 2 years ago, 2 or 3 years ago?
Yeah.
No problems. VA, right? VA appraiser comes in now, and we had to get some paint on this. We had to, they had to get an extended drip pipe. They had to replace a threshold because it was rotted out, but it wasn't rotted out. It was just it was a little hole in there, but it was appraiser discretion, right? So we never know what we're going to get. So, and honestly, would you ever want to encourage your buyer, right? Or I'm never going to encourage my client. I wouldn't want to buy something that is not up to code. Right? Yeah. These codes are in place. Some of them are outdated, but some of them are not. And at the end of the day, if it's a safety issue or if it's your client, you're going to probably want the stuff taken care of. And if you tell me that you don't, then it's a bold-faced lie. Then you're just in it for the money.
So here's what I'll say about that, though. I mean, a lot of this stuff, like I guarantee you could go through your house and there's going to be a lot of things that aren't up to today's current code.
Yeah.
And that's the thing you got to understand. Like a lot of times with inspections, like they're pointing out issues, and a lot of times they'll mention something like, oh, it's knob and tube. Well, okay, yes, it's knob and tube, but they're pointing it out even if it's perfectly functional because those are not up to today's standards. Like even though there's nothing wrong with it, they're still going to point it out.
The inspector or the appraiser?
The inspector. I'm saying the inspector, but that's like advising them not to buy something that's not up to code.
I'm not talking about the inspection. General inspection is a different ballgame. I'm talking about actual appraisals.
No, he's just still up to code, and it's still the same there as far as up to code. I mean, obviously, if there's certain material defects with the house, never. I'm never going to advise anybody to do that. But I mean, every house is going to have stuff that's not up to code. Whether it's
keyword hazard, right? Like health,
That's
safety.
yes.
Yeah. Well,
or something that's going to lead to a later issue.
Yep. The way I think about it is like, okay, in a real estate transaction, the seller's agent, their responsibility is to get the house sold, get the seller the most money, make sure it all goes smoothly. Buyer's agent, get the buyer the best deal, make sure it all goes smoothly. Now, nobody wants to screw anybody in a transaction, right? At least I don't think. That shouldn't be the idea. It should be to come together to a fair deal, and nobody wants to screw anybody. So like when I think about it, okay, the reason an appraiser goes out there and a bank gets an appraisal is to measure the value, to make sure the value is there, make sure the money that they're lending, the value is actually there, right? That's obvious. But it's also to make sure that the house isn't going to catch on fire and blow up in 2 days, right?
Well, they got to make sure that they're covering their
own. They don't want to lend on a house that's going to blow up in 2 days. Mm-hmm. So, if an appraiser is going to ding something because it's a safety hazard, that shouldn't be an issue. That should be, okay, no problem. We'll get it fixed because, once again, you're supposed to come together to make it a fair transaction, to get the seller the most money, the buyer the best deal, but also make sure it's a fair transaction and nobody's getting screwed over. So I don't see why it's a problem. Yes, it's an inconvenience, but if something's wrong, it's got to get fixed. Yeah, it costs money, but
that's
it's a part of the game.
That's the root of why it's a problem. Yeah. Because like you said, the goal is to get the most money for the sellers, and having to make those repairs is money coming out of their pockets.
Sure.
So. Yeah, absolutely. I agree. I mean, the only thing I don't agree with is chip paint. Like, I don't agree with that.
It's old. It's out of date.
Yeah, it's out of date. But here's the thing: you think that you're going to fly with a conventional appraisal with chip paint every time? No,
not always.
Absolutely not. I've been conditioned before. And here's the thing: just because the appraiser doesn't say anything, that doesn't mean an underwriter's not going to say anything. I've had conventional appraisals as what we call as is, which means you need nothing on them. And guess what the underwriter does? The underwriter, per their discretion, and you never know what's going to be their discretion on that day because they're human. And they have to determine, the collateral, the liability, the risk, and they're also looking at the property. They could, in their eyes, go, I want this addressed. I want this addressed because my name is going on the file. If this comes back, then am I responsible or am I not? So these are people. And by the way, FHA, that VA, that's the same thing. Most of the time, if it's as is, you don't have a problem, right? But an appraiser, an underwriter could still hit the appraiser for something. So it's all discretion. That's the entire point.
Yeah. No, I totally agree. I mean, the only other difference I could think of with like a VA, FHA conventional appraisal, like in reality, like, okay, there's misconceptions that a conventional appraiser is going to be easier. That's out there. I don't think it's ever going away. But the only really difference I could think between any of the loans is that VA, it's a requirement to get a pest inspection. That's the only thing I can really think of. That's a difference.
Yeah, and I don't think termites are really prevalent. I've never been caught for one.
Yeah.
Speaking of appraisals, by the way, for conventional, here's where VA, this is actually a benefit, probably a reason why you would want to entice somebody to or entice your seller to take that offer is with the VA, what happens if you have a short appraisal with conventional, right? You can go get another appraisal, right?
Yeah.
That's going to cost you how much?
Right.
Yeah, another $500?
Couple $100, yeah.
Yeah, $200, a couple hundred, yeah. You're talking full price, right?
Especially now.
Yeah.
It might be $1,000.
And it could be more depending on, the availability of the appraiser and the demands. But you never know what you're going to get on that next one. You are really hoping and praying, right? And you're risking more money. And that's if the seller wants to agree, right? If they want to agree to get another one. I don't know if you're having too many of those. I don't know if you're having many of those problems now because everybody just wants to buy a house, but it's going to come again, right? This little, this is going to be, this burn off session's gone in a couple of years. But VA, you can do what we call as a reconsideration of value. Simple put, and it doesn't charge you anything. And guess what? You don't talk to the appraiser. All you do is get the comparables, right, that support the value that you want, and you submit it into the VA. And in 24 to 48 hours, they're the ones that are going to make the determination. I can tell you right now, every single ROV or reconsideration of value, I can tell you, I've got positive results on. I'm not saying it happens every time, but we're not going to obviously fight something that we can't win or we don't have, legitimate argument with. But I can tell you when I'm fighting it, there's comps, and then we don't have to spend money. The the VA signs off on it, and everybody goes home happy. Yeah. So,
well, and I know this is not a proven fact, but it's definitely, in my experience, I know in your experience as well, it's been easier to get the appraiser to adjust value based on comps when it's a VA appraisal. It's been easier.
Yeah,
it's not always. It's not a fact, but it's in our experience, it's been easier that way with the VA appraisal as opposed to FHA, conventional, whatever it may be.
Yeah, because we're not even talking to the appraiser. So if they're biased or if their opinion doesn't agree, guess what? That opinion might be different with the VA. Yeah. And that's the beautiful thing. You get to talk to a third. So why you wouldn't take that is just beyond me. And here's the thing: they're not required for a down payment, right? It's just who in their right mind would not want a 100% down loan? I don't know anybody, no mortgage insurance, 100% down loan. And guess what? That means that they probably have some additional reserves that a conventional or FHA buyer don't have. Yeah. So why are we not pushing for VA loans?
Yeah. The other thing too is, and correct me if I'm wrong, but VA has Tidewater, which is I think that's a value proposition.
Oh, beautiful. Yeah.
Because you know when it's coming, but there's nothing like that for FHA or conventional, right?
Nope. And Tidewater is simply put like this. If you have a purchase contract and you upload it to the VA site, right, because you're required, and that this is what they do to protect veterans. And I'm not sure if you can't do this on a refinance, right? But if that value is not there, they're not going to tell you the exact value. But if that value is not there, there's going to be an issue. Tidewater is initiated, and they're going to notify you before we even send the appraiser. So what I do is when I get notified, call up the client, call up the agent. Here's the thing: we're definitely not getting this value. I can tell you right now, you didn't spend anything. You're not getting the value, right? It's going to be low. Are you okay? Right. So we're addressing that concern and being proactive up front.
Yeah. Because if you're not going to get the value and the seller's like, no, I'm not going to. Okay. Then you don't have to spend $520, whatever it is on an appraisal, and you can walk away.
And they tell you, do you want to proceed or not? So you're not paying. Yeah. It's beautiful. It's one of the best benefits out there.
And it's okay. So that's obviously mainly a benefit for the buyer. But if you think about it, that's actually a benefit for the seller too, because you're not wasting their time.
No, exactly.
They know ahead of time, hey, we know what it's going to come in at. We don't have to waste our time waiting for the appraisal to come in. And for all we know, right now that could be weeks. So it's like I think it's truly a benefit, the Tidewater for both the buyers and the sellers.
It's huge.
Yeah. So, okay, cool. Well, I think we covered a lot there. Let's take a quick break, and then we'll come back, probably talking a little bit more about appraisals, and then we'll talk to you a little bit, Evan, on your end of it, and
we're gonna pick your brain, bro. We're gonna pick your brain.
See what we can do.
All right,
sounds good.
All right, we're back. All right, so what are we gonna dive in? You know what? We're gonna pick your brain, Evan. I think Sam has been urging. Look at him. He's
a little bit of a scenario.
He's tweaking over there. Like, oh my god, I gotta ask him this question.
No, and I honestly just want to know. So, all right, we have right now with the competitive market. Okay, we get let's say you're the listing agent. We get 2 offers, and they're exactly the same, except one's FHA and one's conventional. Obviously, the assumption is because conventional is harder to qualify for, right? Or it has stricter guidelines. Doesn't always mean the buyer's stronger. We know that. We just debunked that. But that's the assumption, right?
Yeah.
So let's say, for example, this FHA buyer is fully pre-underwritten, fully pre-approved, like we talked about, I think in episode 1 or 2, pretty much every episode, I think we brought it up. Basically, with literally a mortgage loan commitment. They give you a mortgage loan commitment with all the conditions. It literally says purchase contract, locked rate, which we can't do that yet. All the stuff you need, until the house is under contract. Or you get a conventional, just standard pre-qualification or pre-approval. We'll even just say pre-approval just to make it a little bit better. In all honesty, and of course, at the end of the day, it's up to your seller, right? How would you look at that? And I know that the pre-approvals or the fully underwritten pre-approvals hold more weight. I know that.
Not everybody.
But with this competitive market, same offer, same terms, 2 loans, one's fully pre-underwritten. I mean, tell me your thoughts there. I mean, what are you thinking?
So, I mean, we've had these conversations before. Like, we know that there's a general misconception between FHA and conventional loan products.
Yeah.
And usually the driving factor in that misconception is, oh, don't go with FHA because when you sell your house, the appraiser's going to ding it. And even though we know that you can get dinged, and we just talked about it minutes ago, you can get dinged on conventional too.
Yep.
But the misconception is like FHA is going to give you this laundry list of items that you just have to do. So I think that's the common misconception there. Like me, I know I'm getting the better offer. My job is if I know there's issues with the house that are going to be flagged, like you were talking about, outlet covers, or if there's not like the GFCI outlets, or there's things that are commonly flagged. Mm-hmm. If I know there's a big list of those, you're missing handrails on stairs, items like that, I might say, hey, in this situation, let's go with the conventional one because you're not going to have to do all these repairs.
Right.
But on a house that's one of the things
how's the house? What's the condition?
Right. And I keep my eye out and I say, hey, there might be some issues on this one that would pop up, or things that are more commonly flagged by FHA. But like if it's a house where maybe you notice outlets, those outlets are $10-15.
Yeah.
Takes you 5 minutes to replace it. That's not huge. I mean, me and Eric have replaced GFCI outlets in a house before, so it's really not like a big deal. So I mean, at that point, I leave it to the seller. I try to educate them, but I think at the same time, even most people within the market have those misconceptions too. So.
Yeah. And no matter how much
difficult.
Yeah. I mean, no matter how much you debunk it, no matter how much you try to drive that message, it's still always going to be there. People are still always going to think FHA is bad. They're still going to think FHA comes with a ridiculous laundry list of items you have to fix. I mean, don't get me wrong. I've had some FHA appraisals come back with some ridiculous conditions. Like we had to send an appraiser out there 3 times because the paint was the wrong color or something. It was something silly like that. But on the flip side, we've had some ridiculous conventional ones too. So I can't understand why it's any different, but I don't expect anybody else to understand because they're not on our side.
Yeah.
You know what I mean?
Listen, the only big difference is like conventional is going to look at the value, right? They're not going to more so focus on like the wear and tear or the hazard, but HUD, you have to conform to HUD standards, which is safety, electrical, working condition, no broken windows, no holes in walls. Would you want your client buying that anyways? Probably not. I wouldn't. Right? Yeah. Especially anything safety related. But like the big okay, what about values? Let's talk about values.
Yeah.
Like we can go back and forth about what needs to be done, we've already established that's going to be 100% an appraiser and underwriter's discretion.
Sure.
Right?
Oh,
so let's talk about value.
They're human.
Why is a conventional appraisal going to be more than FHA?
I don't think the value is going to be more. I just think.
Well, that's what I've heard. This is the reason why they won't take an FHA because, there's value problems. I've heard that all so much in this industry.
I don't know. I personally don't have those thoughts that it's a value problem because the only time I had FHA appraisal come in low, I've had a handful come in low, but also with this market, people have felt that they could get away with whatever, so they're already listing it high.
Yeah.
So I think more than the value coming in low, these people are just poorly pricing these listings, and that's why they're coming in low. Yeah. They're getting greedy. They think they can get whatever they can for this house because you have desperate buyers, and if you have one house in an area where there's 400 people looking, They don't have a
So,
choice.
what you're saying is that
I think the low appraisal problems is because of greed.
okay? All right.
Yeah, well, and
Okay.
at the end of the day,
Fair
like if
enough.
you think about it, like this is a little bit off topic, but it's actually good that appraisals are coming in low because if they just keep appraising at what these people are paying and it keeps going up and
Well,
up
it's
and up,
just going to make everything.
we don't want that. We don't
No.
want you don't want a ridiculous drive up in price. We've
You
already
wanna drive
seen,
people out of the market as it
Yeah,
is. The rates
exactly.
are already going up. What do you want to
Exactly.
do to these people? I
Right.
understand you want to sell, but remember that person that's selling still has to buy again.
yeah,
Right. Well,
Right?
now, like you mentioned, with prices rising, rates rising, I mean, certain neighborhoods that I look at that a year or two ago, you could get a nice starter home for
under 100,000 or
Well,
less.
yeah. I mean, I look at like Parma, for example. I look
Yep.
at Brook Park, for example. You could buy my 2019. I sold a really, really, really nice house in Parma, $95,000. You buy a $95,000 house in Parma right now, you're gonna have to completely redo.
You could really
everything.
kick that house over with one kick. right?
Honestly, yeah. And
If
same
the
thing with
investors already haven't eaten it up.
Yeah.
yeah. And same thing with Brook Park. I mean, a couple of years ago, you could find a really nice Brook Park home for 150 or anywhere between like 100 and 150.
Yeah.
Decent houses too.
Well, yeah,
Decent.
no, I'm talking
Really
like fully updated. Not fully
Turnkey.
updated. These fully updated 900 square foot ranches are selling for like 225 at times,
Yeah.
which I look at that and I'm like,
Well, you know what? This all stems back. This is all created by COVID. 100% COVID.
Yeah.
We wouldn't have seen this. What is it? 18% we've had houses appreciate higher from
for
last year to
20,
this.
yeah,
Yeah,
2021.
it's insane. But here's the thing: is like COVID started this, right? And we're kind of rolling with it. You know, government thinks they're doing a great job by pumping all this money in the economy, giving everybody this money. You know, and then boom, interest rates are low, and then poosh, and there goes the home values. There they go. People
Yeah.
are borrowing money, and now they want to raise. They raise the Fed rates 0.25%, even though we have a strong labor market and price stability. Yeah, that makes sense. Let's raise the rates and just push all these other people out and just,
Yeah.
kill some
going-
incomes.
Going off of what you kind of had said about COVID being the driving factor, with that messing up supply chain, stuff like that. I mean, the main driving factor in some of the prices too is inventory. And with
100%.
supply chain issues, with
Yep.
these lumber mills
Yep.
being shut down, I mean, nobody was building. You have
Well,
you had labor shortages too. Unions, carpenters, skilled trades. I mean, they didn't have them in the same numbers that they had in previous years because unemployment. People were why work when I can
Yeah,
collect the
I
same
get
amount of money from the
that-
government.
Yeah, but that's more so of a moral issue. That's an ethical. Do I work or do I work? Can I blame them? No. Would I ever stop
I
working?
mean, everybody's doing it.
No, I don't.
And,
I'm
and
not
all,
doing
no,
it.
no, no. I'm not saying
doing it.
everybody. I'm saying just like people in all industries. I
It's
mean,
common,
it's
yeah.
not
Well,
just
yeah,
it's
yeah.
not just it's this specific
Yeah.
industry. I mean, it's happening everywhere. But I mean, the reasons like that. I mean, the lack of new building. I think I don't know the exact amount that it slowed down by, but it had definitely slowed.
36,000. It actually dropped. So builder sentiment.
36,000 less
So-
homes, or
No. Yeah. So what they do is they have what we call as a housing permit index, right?
Okay.
And I think it was like 1,893,000, and it was dropped down to like 1,856,000 or something like that. So basically, what they do is they gauge how many new builds are based on how many housing permits are obtained, right? So when the rates shifted up in the past couple of days, right, went haywire, or since last month, since things have started to progress up, well, that has killed some builder sentiment, right? Which is the builders, they're looking at, the affordability, right? Because they have an initial investment as well. They're looking at supply chains. They're also looking at the interest rates, right? Because we dealt with this in 2008. You had a ton of homes that went up, and then boom, everything crashes, right?
Yeah.
So yeah, the housing permit, it was like down 36,000. So the more that the rates rise, I think it's going to deter more builders from building, right? So that's kind of another, it's a complex problem too.
Yeah.
And at the same time, like a lot of these builders, they will have like a like if the price you see is like the price you pay, like kind of thing like that, which kind of has hurt them in the past because before all the COVID stuff, you sign here, lumber, all your materials are this price, and then once that hit, I mean, what was it, like a 4x6 OSB half-inch sheathing was up to like $110 per board. I mean, It went crazy.
Yeah,
like,
absolutely crazy.
well, and that's the
insane.
thing. And then their margins are completely shattered on that end. So that was deterring people too. And then the ones who didn't have those clauses in there, hey, you're going to owe us another $20,000 for the increase in material.
Yeah.
And then the person building couldn't afford it. So, I mean, it was just a all around mess from that.
By the way, I'm actually popping an MBS highway. I actually want to look at the housing permits here. I want to get some exact numbers. So, sorry.
Never mind, but kind of got off topic there.
Yeah,
But
I
just
mean-
going back to what you said about the FHA and conventional, I think that I mean, if you have that mortgage loan commitment, if you have the what is it, the PYT,
Protect your transaction.
yeah, if you have all that and it's fully underwritten, I mean,
Yeah, the loan's
I don't
approved.
think-
It's
I
clear
don't
to
thi-
close.
yeah, I don't
Yeah.
think
I
that's,
mean, isn't that the goal? Like, is it, let me ask you this: is because a PYT, you know, for an example, with our PYTs through VA, conventional, FHA, doesn't matter. The underwriter signed off on the file.
Yeah.
Just give me a contract, purchase. You know, give me a contract, title work, and an appraisal. Right? Is the goal to pick which loan program you feel is going to be the best, even though you know nothing about it, right? Or that particular situation, because you're not looking at the underwriter, right? Or is the goal to you know, just offload the property as quick as you can, right?
Yeah.
We have a duty, right? You have a duty to the client, right, to get the max, right?
Yeah.
So if I have an FHA that's coming over that conventional, why wouldn't you take the FHA? It's just, I don't know. It's just,
well, that's the thing. I wouldn't, but I know why people. It's those same misconceptions. That's why they wouldn't.
Yeah. And, you know, there's
Doesn't make sense because I mean,
well, just the
But-
thing is too is there's so many mortgage companies, right? There's so many realtors, so it's like, you know, 9 times out of 10, everybody's heard that story before. Like, oh, our approval's the best. You know, it's
Well,
already pre under.
I'm actually,
Everybody's heard that story.
I'm actually glad you brought that up because
Yeah.
I mean, the pre-approval itself and the company they can hold a lot
Weight.
of weight too.
Yeah.
Whether it's an agent, like if I'm an agent and you're an agent and we don't work well together, we've worked in the past and we know like, okay, like Dustin's a terrible agent, right? Or you have Sam and Sam's a great agent. You work really well with
Sounds
him.
accurate. Yeah.
I mean, yeah. Dustin's
Sorry.
terrible. Sam's amazing.
this is
Yeah.
you guys like taking shots at me.
No,
every
no, no,
week,
I'm-
man.
I'm
Last
just-
week it
This
was
is
the
payback.
breathing.
This is payback for. Oh yeah.
Hey,
well,
that wasn't us.
Last
though.
week
That
was
wasn't
the
us.
breathing.
Yeah, we pulled that out. You're welcome.
Yes.
This is just payback for episode 1 when you took a shot at Evan within the first 2 minutes.
It
No,
wasn't a shot. It was the truth. Don't be mad at the truth.
No, I mean, listen. Everybody's heard the everybody's heard the same story. Our pre-approval's the best. It's already pre-under it because everybody can say that, right? We could put
Show it to me,
We
though.
put 15. Yeah, I mean,
Show me the underwriting approval.
Well, that's what. Yeah.
exactly. We put 50. That's why we put $15,000 behind it, is because everybody's heard the same story. It's pre-underwritten, but like, you know, on every pre-approval, if you read the fine print, you'll always see it like not a pre-underwritten pre-approval, like just a general pre-approval. You'll see that like it says on there, like in legal, you know, non-English, it says like we can basically deny this loan at any point in time if we want to. It's what it says. It's
Yeah.
a pre-approval.
Yeah.
And nobody reads that too far in depth, but you know where I'm going with this is I think it's never going to really change. The only thing we could do is try to change it, but everybody's heard the same story with the pre-underwriting, pre-approval. And the way I think people look at cash is, okay, it's guaranteed to close. They don't have to worry about any financing. But I don't know. I know you've told me before. It's like, okay, we get, you know, cash offer, and then we get a financed offer, and the finance offer is higher. You're like, take the higher offer, take more money. Why would you take the? Yeah. So
I mean that yeah, and two, like sometimes with like the services, whether it's the agent, kind of like what I starting to go into.
Yeah.
Like I mean, sometimes I'm sure there's been times where if you know you work really well with an agent, they're gonna get it done. You know their loan officer, the loan officer, you know that they're gonna get it done, right?
yeah.
I mean, we've done it before with Alex. We called you and you said, hey, like one of our buyers is interested in your house. Like,
Yeah.
like, and
Help.
it's yeah. I mean, it's like they know you, right? And you're able to vouch like, hey, like we do business together. Now one of my buyers is interested. Like that gives you an extra level of credibility that
Yeah.
you wouldn't have it like So that definitely plays a role into
Yeah,
things
but we
too.
can't. Yeah, but you shouldn't be depending on that though. We should all be transparent because it's not fair to everybody. It's just because you don't know me that I
No.
shouldn't-
But
yeah.
I'm saying if you've worked with somebody in the past and you know how they operate, you know that they're gonna close. You know that. I mean, that plays a role. Like that's why, like with you guys, like I know anytime, like if somebody were to bring me a pre-approval on a listing of mine and it says Sam and Dustin, I'm like,
I'm going throw that garbage in the trash.
yeah. No, I'm
Well,
going.
good
I'm
thing
going
we
to
don't have-
myself.
We don't have to worry about pre-approvals.
Yeah,
We really
I don't know.
have issues
I don't know what that
anymore.
is. Yeah.
Right.
Yeah,
Okay.
I know what PYT is.
You know what I'm saying. You know what I'm saying. But if I bring this to my seller, I'm able to say, I'm like, hey,
Yeah.
I've done business with them before. Like, yes, okay, this offer might be different, but these guys, I work with them. They're credible. They're gonna close.
Yeah.
They're gonna close. I mean, that brings an extra level of value to
Yeah. I mean,
an offer at points. So
definitely. I mean, this is more on the buyer side too, but for the lender, call the listing agent, man. Call them. It just shows. I mean, I know there's like, everybody's communicative. Everybody answers the phone on weekends. Well, not everybody, but a lot of people. That's their value proposition. Answer the phone on weekends. But like, if you actually show it, and you don't just say I answer the phone on weekends, and you actually call them at 8 p.m. on a Friday night, and you say, hey, I'm the lender on this file. This is a solid buyer. Here's why I did this, this, and this. It holds a lot more weight. I don't know. If I was a listing agent, then again, I'm not. So I'm a lender. I'm a little bit biased, right? But if I was a listing agent, I'd FHA offer that was fully pre-underwritten, pre-approved, and a conventional offer with the same terms, same price. And the lender called me and told me exactly what happened and what processes they went through and gave me the mortgage loan commitment. That's an ugly underwriting document, but shows that this is the conditions to close a loan. I'd be like, let's take that one. The house is in good condition. There's nothing we really need to worry about. If there is, then we're going to find out eventually anyways. I would take that offer all day long.
yeah,
I'm biased, but
It's one more thing too. If you're an agent for a client, it's probably not the best. Like I hear this sometimes. Don't discourage the client because they got an FHA offer. Don't tell them they're never going to win a house because that's a load there. That's not correct. That's false. I've got a ton of FHA buyers. I got a ton of VA that they've been accepted. So don't anybody that's out there. Don't get discouraged, okay? And if that agent's telling you that, fire the agent, get a different
Well,
one.
here's what I will say. From the buyer's end, when they're looking at Zillow and Realtor.com, like an MLS, one of the fields you can put is financing options that they're accepting.
Yeah.
I mean, they on the consumer's end, they don't see that.
Yeah.
So sometimes if they send you a house and up front, like, hey, they're not
That's
accepting.
a different story. That's not
Right.
Discouraging them from looking because you're an FHA
oh,
buyer and
yeah.
you don't want to put that effort in them because I'm dealing with it right now. They're not getting the full red carpet surface. Like our job is to serve. Our job is to go forward with what we have.
Yeah.
And it's not to argue with the mortgage planner on the financing. It's like this is what it is. Everything's meant to happen for a reason when the time comes. Give your full effort, and we're going to hit that miracle. And if we don't, then we're just going to be patient. That's my frustration behind that.
Yeah.
There's always ways to get offers accepted. I mean,
Yeah,
like you
100%.
said, there's never
100%.
there's never
Strategy right
you
there.
can get
That's
creative.
what creative. Exactly. 100%.
Definitely. No, I think this was a good, rather short episode. Did a little technical difficulty there.
little all over the place too.
Laptop died. Little all over the place, but I think we had a lot of good stuff that we
Yeah.
put together.
A lot
in
of
here.
good information. I mean,
Like I
there's
said,
some-
yeah, and nothing that we say is going to change the whole industry. We all know that. They're still going to take cash offers over FHA, or over
Conventional,
yeah,
or-
you know what I mean. They're still gonna that's still going to happen, but I think the more people hear it, the more it can really start to change. But that's our opinion on it, and I know you gave some great value
that's
too.
all this is. It's an opinion.
Yeah,
I mean,
100%.
it's what it is.
Cool. But I think a lot of people are going to learn about like the VA Tidewater stuff that they didn't really know before, which is good. That's the whole purpose of this.
Yep.
But
absolutely.
no, it's a good episode, short one. Don't know if we're having a guest on next week. That's TBD. If not, it'll just be us again. So
Yep.
Cool.
So,
All right,
yeah,
peace.
we'll
Awesome.
see you guys
good
next
job,
week.
guys.
Later.